Hey everyone, Angelo behindthevault.net. Today I'm going to give you 5 tax-free savings account tips that are going to make you more money and have you better structured to protect those assets. Let's go behind the vault. TFSA tip number 1, and it's the most crucial: be mindful of your contribution room. This is not a bank account. It's not something you put money in and take out and put in and take out. Because when you put in money and take out money in the same year, you're chewing away at your contribution room. So I'll give you an example. Let's say you've turned 18 years old this year and you've got $6,000 of contribution room in your tax-free savings account. So you put in $1,000. You've used up $1,000, you've got $5,000 left. Okay, a couple months later, you pull that $1,000 out, you go party. No problem. A month later, you put $1,000 back in. You are not replacing the $1,000 you've taken out. You are actually using more contribution room. So now your contribution room shrinks from $5,000 down to $4,000. You see how in the course of a year, in and out, doing the hokey pokey with your money in your tax-free savings account will whittle away that contribution room. So what you want to do is take a longer term focused approach on your tax-free savings account. I've got an entire video that we're going to do on being mindful of contribution room, because not only can you whittle away that contribution room, there is a chance that you could permanently lose it. And that's definitely something we don't want. Tip number 2, remember that you're using after-tax money when you're funding your tax-free savings account. So you're gonna earn that money, you're gonna pay your tax, and then what's left over is what's going to fund the account. So you're not gonna get a tax break, it's not gonna reduce your taxable income, you're going to concede the tax on this, and then you're gonna invest in your tax-free savings account. Now the benefit of that is that when the money comes out, it's tax-free forever. So that money will grow and grow and grow and grow. And when you start to take money out of your tax-free savings account, it's not gonna add on to your pension at retirement or your CPP income or your old age security or whatever sort of income you're gonna be generating then. So it's a great tool to manage bigger needs at retirement, or even just down the road, whether it's vacation or renovation or something of that nature. Be mindful of the tax bracket that you're in. Be mindful of the fact that you're using after-tax money. All right, tip number 3. As I've always said, when it comes to investing and financial planning, think like a bank robber. Bank robbers rob banks because that's where the money is. And you want to go to the right place to get the most bang for your buck. So if you've got $10,000, for example, and you want to invest in your tax-free savings account, and some of the investments you're looking at are going to make you 5, 6, 7, maybe even 10% return, that's great. But if you've got this credit card debt over here of $10,000 or more, and it's costing you 19% or 20% to carry that debt, you're losing. Because the return in your TFSA is not going to generate enough to cover the interest that you're paying on this debt over here. So think like a bank robber. If I have debt that's higher than the potential return on my investments, you probably should be knocking that debt down first. And then once that debt's handled, or mostly handled, we can start pumping up that tax-free savings account. Alternatively, what if you've got a mortgage and that mortgage is only 1.5% or 2%, but the potential of earning in your tax-free savings account is 5, 6, 7, 10%. Well, again, think like a bank robber. Why would I pay that mortgage down when interest rates are so low when I could make more in my TFSA with that same amount of money? Think like a bank robber, it'll put more money in your pocket. Tip number 4, any investment can be invested in your TFSA except for physical property. So you can buy stock, you can buy mutual funds, you can buy ETFs, you can buy commodities, you can buy crypto, you can buy REITs, okay? You can buy all types of financial investment products, and you can grow those products within your TFSA tax-free. Now be mindful, because if it goes the other way, investment tanks, you're not able to claim the loss against your income. And there is a chance that you could permanently lose TFSA contribution room. We're gonna do another video on that. Make sure to check the description below and click on that. Super important to know. Tip number 5, understanding the difference between successor holder and beneficiary. A beneficiary is something people are pretty much familiar with. If something happens to me and I pass away, this is the person I want who's gonna take that money. So whether it's my kids or my charity or my church or whomever. Now, what a successor holder is though, is if you're married or have a common law partner, you can name them as a successor holder. And here's why you want to do that. Let's say we have a couple and one person passes away but names the other as the beneficiary. Well, if the other person has already maxed out their tax-free savings account room, they'll receive that money tax-free, but they've got no room to put in their tax-free savings account. So now they're forced to take that money and invest it in another vehicle, usually a non-registered account, which will attract dividend, capital gains, and interest income. So there's gonna be some taxes on that. But if that partner would have named their partner as a successor holder, what happens now is the successor holder receiving it receives their partner's TFSA in totality inside their TFSA without compromising their own personal contribution room. So if you and I were partners and I passed away and I had 75 grand in my tax-free savings account and I named you as the successor holder, if your TFSA was maxed, that would be okay. My 75 grand would now jump into your TFSA and continue to grow tax-free forever without compromising your own tax-free contribution room. All right, there are 5 tips that allow you to make more money, protect your assets, and make sure that in any circumstance, you're maxing out your dollars. You've been Behind the Vault. Hey everyone, I hope you really enjoyed our video on our tax-free savings account tips. Make sure to like and subscribe below. Let's get that algorithm going so we can share this information with everybody. Be sure to subscribe to get more videos, hit that notification button, and here's our next video.